All right. Well, I think we are operational. So welcome. Welcome to this week's edition of the Construction CPA's Coffee Cafe. I am the Construction CPA Lisa Raish. We are dropping the hammer on cash flow problems so you can build things that matter. This week's topic is what happens if you don't do your accounting or your business's accounting? We get that a lot. We get individuals that come to us. They haven't done their accounting up to date for that particular year, or they're new to business and haven't really tracked anything. And so, kind of what happens if you don't do your accounting, right? So, you're going to want to, again, we're going to talk about a number of different things, but you really should be doing your accounting because it is foundational for not only for the health of your business, for the growth of your business. So, um, the one of the most important things is to at least do your have it up to date, right? We've talked about cash versus accrual before. Regardless of that, you want to have something tracked. Um, far too often, individuals don't have anything at all. And so if you've got something that's up to date or relatively up to date, now you can start to make financial decisions because without it, you've just got a complete lack of financial visibility. There really is no clear picture of your finances, of what your business has done to date, what your cash is, who owes you money, who you owe money to. And those are all really big kind of red flags when it comes to business. Again, if you don't know, it's just you look at your business's health just like you look at your own personal health, right? If you're not actually, checking to see how you're doing, when you get really, really sick and you haven't paid attention to it all these years, you shouldn't actually be surprised that you're sick because you haven't paid attention to it. So you want to make sure you're tracking your income, what dollars are coming in the door. It's not just for overall business purposes, but there's also that little tax thing. We talk about that a lot too. Clients usually are pretty preoccupied with kind of ensuring, they don't pay tax or they pay as little tax as possible. If you're not tracking your finances, you can't keep track of any of that information. So you can't make informed decisions. Are you doing projects that you shouldn't be doing because they aren't profitable? Well, if you aren't tracking your revenue and you aren't tracking your expenses, you don't necessarily know that you're doing projects that you shouldn't be doing. And therefore, you can't make a decision that, oh, I'm not going to do these types of projects any longer because they aren't profitable for me, for instance. Um, it's how do you know whether you should be hiring people or you can hire people? If you don't have any visibility into your finances, you don't know that you can hire a person, or actually you can't hire a person without getting some sort of short-term financing because there's a ramp time for hiring those people and getting them trained and getting them operational in your business or whatever it is. But if you don't have that insight, you can't make those decisions and then you're making them blindly. And so you run into those challenges where you hire someone and then you get a couple, maybe a month or two in, and you realize, oh, I actually can't afford this person. But if you didn't keep track of your finances, if you aren't tracking your revenue and your expenses and you're not doing your job costing, you aren't able to really determine until sometimes it's too late that you in fact couldn't afford this person. Or one of the things we get a lot is, can I afford to buy another, couple of pieces of equipment? That's a big one too. There's a lot of cash going out to pay for equipment. If you're not using the equipment efficiently, i.e., bringing in revenues in order to support that, that equipment should be generating revenues for you in some way. Then you don't know whether or not you can in fact purchase that equipment. And again, just like bringing on a team member, it can get quite costly. You bring on a piece of equipment, then you realize you honestly can't pay for it. Um, it's a little more challenging now to get rid of that piece of equipment versus laying off a team member. But you see where you've kind of painted yourself into a position where it's hard to make a decision and you're almost dumped with a decision after the fact because you didn't have all of the necessary information to in fact make that good decision. And then there's also just there are times where you need to cut costs, But if you're not keeping track of your expenses, how do you know that where you could potentially be cutting costs because you don't actually keep track of your expenses? So again, if you aren't tracking that information, you have no clear picture of what's going on financially in your business. The other thing is, and we talk about this a lot, is cash flow, right? How do you know what cash is coming in and what cash goes out or needs to go out if you aren't, in fact, keeping track of your financials, if you aren't doing your accounting, you aren't doing your bookkeeping? And when I say that, I don't mean you individually as the person, but for your business, right? If it's not being done in your business, then how are you determining that? Oh no, in 4 weeks, 5 weeks, you might run out of cash. But if you aren't tracking your accounting, you can't, in fact, make predictions about what cash is coming and going in the next 4, 8, 12 weeks. One of the things that we do a lot with clients is that quarter, that 13-week cash flow. If we don't know what's going to come in or the expectation of what's coming in and what should be going out, that's a hard number to, that's kind of a hard number to pin down. And so again, are you going to run into financial challenges in terms of not having enough cash in order to pay your expenses? There are times where that also leads to, are you making your payments late? So for example, you have a relationship with your subcontractors or your material vendors. Are you paying your material vendors, late all the time? Are you paying late fees because you're paying those vendors late all the time? Are they, in fact, going to cut your credit line with them or not allow you to order anymore because you, in fact, paid late, haven't paid at all? But if you don't have insight into your cash flow, then it's hard to get ahead of. And then you end up in a situation where when a material vendor cuts you off, you're in a much more challenging position because now you've got to find somewhere else to get that material. So again, you're not getting the opportunity to make the decisions. You're getting dumped with the options or the decisions based on not having your accounting. So again, it's hard to determine what cash is coming and going in your business if you're not tracking your accounting or you're not having your bookkeeping done on a regular basis. And it really, a lot of times, especially with cash flow, it just ends up being a kind of that ripple in the tide type of situation where it's just one thing and it just keeps going and it keeps kind of just cycling through. So if you don't have any insight into your cash, then it's really hard for you to make business decisions. Talked about it a minute ago, tax, right? Tax is a big thing. Are you going to, if you don't have your accounting done, are you scrambling to get it done after the fact so that you, in fact, can file a tax return? And are you potentially filing those tax returns late because you haven't had your accounting done? That can get costly to you as well, because all of the taxing authorities are going to charge you penalties and interest for not filing things on time. So that's a big thing. Are there payments that you need to be making with those tax deadlines as well? So, are you missing those deadlines because you don't have that information tracked? Are you not making those deposits, those tax estimates, those tax deposits, those tax payments, all of that, because you, in fact, don't have any of that information tracked? It's late, right? So, or are you not tracking it and you just don't have a good accounting of the numbers? So what you're reporting to them may, in fact, not be correct because you have scrambled to pull together all the information after the fact, or you don't have all the information. So you're trying to put it all together into a bucket so that you, in fact, can do a tax return. So now you have no insight into your future of your business, but even the history is questionable. Is the information that you've collected and you've aggregated together actually accurate? So, are you reporting accurately from a tax perspective? So, are you underreporting expenses because you just didn't track them properly? And therefore, maybe you are, in fact, paying more income tax because you didn't track your expenses properly. We don't want to see you overpaying taxes. Now, on the other side of it, are you underreporting your revenue because you didn't keep track of it? And underreporting is a problem, as much of a problem. And again, no one wants to pay more in tax than they have to, but there are issues and penalties and interest, and you can get in trouble for underreporting your revenues to the taxing authorities should that come up later on down the road. So again, you've now run into a couple of it's both sides of that particular matter. It's, did I underreport expenses? Did I underreport revenue? Right? You're in fact not reporting accurately. So you've exposed yourself from a tax compliance perspective, penalties and interest, et cetera. So you expose yourself, you expose your business because you did not keep your accounting up to date. You didn't have an accurate set of accounting, and it was just maybe something you threw together, so that you could in fact, oh, I threw something together to do a tax return. Now, a little bit farther down the road, should you get chosen for audit for whatever reason, now you don't actually have an accurate record of what it is that you've reported. And that becomes challenging also when you have to present this information in an income tax or some type of tax audit with any one of the authorities, whether it be the federal level or on the state level. Now it's hard to, I don't actually have an accurate accounting of the information I reported on that tax return. And therefore, that's another layer of consequence to you, right? You don't have the appropriate information. You're required by law to maintain the appropriate information. And then if you can't actually prove the information that you've in fact reported on a tax return, again, you're subject to adjustments, penalties, and interest on those adjustments, et cetera. So again, you can expose yourself from a tax perspective by not keeping your accounting up to date. Most people are not fans of any of the taxing authorities. So that's an area you really don't want to expose yourself in, because it can get quite costly, not only from the penalties and interest perspective, but also now in many cases, if you have, you've now engaged your professional to represent you, before any one of the taxing authorities. So now there's another layer of expense there too, in order to represent you in front of the taxing authorities. So now, had you actually done your accounting, you would have had a more accurate information. It would have been in a place where you can actually find it. You felt comfortable with the numbers. So if you end up in an audit situation, you in fact have documentation and support to support the information. So again, not keeping track of your accounting down the road could actually snowball into a much larger cost and expense to you as a business owner, because you just don't have the information you need in order to support what you've actually filed. So tax can, on both sides of it, get a little bit costly. Another big thing is, again, we work with a lot of construction. So construction is typically buying equipment. What comes with the purchase of equipment? It's usually some level of financing. So you're going to go to the bank or some sort of financing entity in order to purchase and finance these larger pieces of equipment, trucks, et cetera. If you don't have an accurate set of financial information in order to present to the bank, in many cases, they want your last tax return. So if your last tax return isn't actually complete, because you didn't have your financial information together, that's a problem. But they're also going to, for instance, if you're in a mid-year, you're in the latter part of the year, they're going to want that year's information to that point, along with that last couple of filed tax returns. And if you aren't able to present that, then it's very hard for you to be able to get financing from the bank, because they can't tell if you're going to be able to pay them back. And now you don't want to be in the position where you're scrambling to pull your financial information together to, in fact, go to the bank to borrow money. You want to make sure that you have that information up to date and as accurate as possible, at least close through the prior month, so that you can, in fact, present that information with ease to your financial institution to say, yes, here's my tax return, our financials up to the last closed month. And then therefore, now you're in a better position to be able to purchase a vehicle, any kind of large equipment. And the bank, again, now has the information they need to make a good business decision to determine whether or not loaning you money makes sense. Some of you may be interested possibly in growing in some way. So maybe you're looking for outside investment. Any investor, should they want to invest in your business, is going to want to see not only historical financial information, but not just your last tax return. They're going to want to see, again, up to the last closed month, in terms of your financial, your profit and loss statement, your balance sheet. And then they're going to want to see any kind of forecast that you're going to have for the next 1 to 3 years to determine whether or not they want to invest in your business. Again, if you don't have this information, you can't readily hand it over. And that's, again, not the time where you want to start to scramble to put it all together, because now someone's interested in investing in your business. You want to have that information right there to be able to kind of hand it over. If you're scrambling to put it all together at that moment, you take you take that chance where you lose that opportunity, because now whoever wants to invest in you sees like, oh, they don't actually have up-to-date financial information. So do I really want to invest in a business that doesn't even care to have that information at hand and be able to give me the most accurate information? So again, whether it comes down to securing any kind of loans or even some sort of outside capital investment, should you look for investors, they're going to want to be able to see that. They want to see your history, and they're going to want to see some sort of forecast based on what you think is going to happen, as well as some layer of like historical information there. So again, you're going to want to have that info. Um, on the other side of it, there's just the basic, when you start to operate in these type of areas, you have customers, you have your banks that you're doing financing with, you have your taxing authorities. These are the types of things that when you start to engage with these outside sources, if they in fact see that you don't have accurate and up-to-date financial information, it doesn't reflect well on you as a business owner, because it's going to reflect ultimately on how you operate your entire business. If you don't have up-to-date financial information, then how are you running the rest of your business? Do you run the rest of your business kind of on the fly? And if that's the case, it makes it very challenging for other people to want to do business with you, however that may be, in that kind of contractor, subcontractor way, or with the financial institution. It shows people one side of your business, and then can be a reflection on, well, if they're disorganized in their financial way, are they disorganized in the other aspects of the business, i.e., actually getting projects completed, revenues collected, people getting paid, and so on. So again, it ends up being just a level of trust that if people know that you aren't keeping your financial statements up to date, it can be a reflection of not just you personally, but the overall business and how you operate that business. Again, we talked about cash flow, right? That's a big thing. Not being able to make decisions. In the end, all of those things are going to roll out into potentially leaving you in a place where you could risk insolvency, or even your business failing, because you just didn't know. You didn't have that financial information to actually know what's going on. You might have an inkling, but you have no accurate, real idea of what, like, oh, this is actually what's going on. These are the actual numbers here. You might not be able to meet your obligations. If you don't have the cash to pay your vendors and your material vendors and your subs, that's a big piece of it. And so now you're not able to meet your business obligations. But if you don't have accurate accounting, if you don't know who owes you money because you don't keep track of your accounting well, or you don't know who you owe money to because you don't keep track of your accounting, again, you may not be able to meet your obligations. That leads you into a risk, again, as I mentioned, of insolvency, but also your business could end. That could be the end of your business. And once you run into financial challenges, especially if you don't really know what's going on in your business, that's not the time and the place where you want to, again, go to the bank and you want to attempt to borrow money. Trying to borrow money when you're running into challenges in your business is not the time to borrow money. You will find that it is very hard to borrow money. We always recommend that clients get or work on getting their lines of credit, et cetera, in advance. When things are good, you may not need that today, but you might need it down the road. So again, do you want to go out of business, right? Just because you ignored the actual day-to-day financial information, that could lead you to a place where you end up out of business. The other thing, we talked a little, like a moment ago, a little bit about investors. Should you have the opportunity to have investors come into your business and now you've gotten an opportunity to grow your business or a specific type of business opportunity, if you don't have that information, then you may not be able to get ahead of it and spot those things, right? Oh, there's an opportunity here. I have an opportunity with an investor, but I don't have the financial information. Or, I'm watching what's going on in the industry or in my community as to what's going on. If you aren't keeping track of that information, you might miss an actual growth opportunity. There might be a new revenue stream that might be an option for you in your business, but because you don't have any historical information to use to build off of, again, that might be a lost opportunity for you moving forward. We talk a lot about, oh, you want to make sure that you understand, you're getting the right margins on the right services. It may not just be dropping a service because it's not profitable, but it might be, hey, there might be this one thing that we can do just that's slightly tangential to what we're doing now, which might be a great opportunity. But if you don't have that financial history there to use as a basis of determining, okay, I have no idea. Oh, I am okay. Well, I'm going to keep going because I don't know what we lost. Oh man, I'm definitely not a technology guru, man. Oh well. Anyways. Oh, we might be back on now. I don't know where we fell off, so I apologize in advance. I don't know. It's technology, so I don't necessarily have the tech gene. All right. So what a always something. Anyways, all right. So let's go back over the kind of the high level things, that the tips that we talked about. So first, what happens if you don't do your business accounting? You lack a complete visibility into your finances, and you can't make any decisions if you don't know what's going on in your business. You may, in fact, run into cash flow problems. And in many cases, you probably will run into cash flow if you don't keep track, because you just don't. It's the same thing. You can't make decisions because you have no idea what's coming in and what's going out. So you can and will create cash flow problems. You may, in fact, miss tax deadlines or tax credits and options, and all of the planning that you've done goes poof because you aren't actually taking advantage of things that you could, because you don't have the financial information there. So again, it's missed tax deadlines. It could be penalties and interest associated with that. Again, tax is a big piece of it, can get quite costly if you don't keep track of your financial information. Can be really hard for you to secure any kind of financing. You want to buy equipment. It's really hard to purchase new equipment from the bank when you don't have financial statements up to date for that current year. And then if you don't have a tax return for the prior year, those are all basic things that they're going to want and look for. And if you don't have that, you're just not going to be able to get your financing. If people find out that you don't have your information up to date, it could potentially damage your reputation. It does not look, it looks unprofessional. It is not an image that you want to portray, because it is a reflection of how you probably do business in the rest, like actually operate throughout the rest of your business. You take the chance of being insolvent, potentially going bankrupt, your business failing. So that's a really big issue. If you don't know what's going on in your business from a financial standpoint, you may not have a business left to actually make decisions on. And last is, you may in fact miss an opportunity to grow your business, or an opportunity to move into another service line if you don't have accurate history, as well as a forecast to determine, where you can go with that. So it is really important that you do your accounting. It is foundational to your business. It is going to, anything else you do is going to be built on top of. Your accounting is that foundation. And this is going to be, really cheeky construction, but if you don't have a solid foundation, you're not going to be able to build that structure on top of it. And so all of the things that you're going to want to do in your business are going to be built on that solid financial foundation. So do your accounting, have somebody internally in your business that knows how to do it, someone that is qualified to do it. If you don't have someone internally, there are firms like ours. There are many of us out there where you can get your accounting done outsourced through a service that can provide you with the financial information that you need. So it's important that you have that so you can make good business decisions. It was great to see everybody, even after the looks like the technology bit out on us. So it was great to see everyone here this week on the Construction CPA's Coffee Cafe. I look forward to seeing you here every week. Have a great weekend, and we'll see you next week.